please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, it's starting 1/3% higher and the bank Nifty is not trading at all-time highs. So we have to wait probably another 15, 17 points for it to get to that. Okay, it's getting there. It's okay, there it is. All-time highs for the Nifty bank. 28,377 was touched and 379 I think got touched. And now it's dilly-dallying around that place. But of course, it's all-time highs for the Sensex and the Nifty. 11,750 almost, 737, 738. That's 0.4 higher. And the Sensex as well, 150, 160 higher, 38,850. So it's actually shouting distance from 40,000. What a grand day. Let's look at stocks that have got it there. Many of the metal stocks, actually, it's standing on many pillars. There's Bharti Airtel, Hindalco, Tech Mahindra, Tata Motors, GAIL. Just to give you the spread, these are the top 5 stocks. So it's climbing on all these. And then some more. Vedanta, NTPC. NTPC, of course, is seen as a beneficiary because so many other power companies, independent power producers, are shackled. Coal India, Reliance. Reliance Big Boy is giving almost a 1% support. Kotak Mahindra Bank already, I think it was Sudarshan's buy. That's up 1%. IndusInd Bank is up about 1%. M&M, HDFC, all the big boys are participating. UPL. Now the index is up 0.5% and 11,750 is scaled. 0.5% higher on the Sensex as well. That's 200 up for the Sensex. And the Nifty Bank is once again at all-time highs. 28,380 was scaled. It's only Yes Bank, Titan, HUL, BPCL, HPCL and Axis Bank that are not participating. Yes Bank, yes. That puzzle continues. It's 28th of August and the continuation of the managing director's letter has not come from the Reserve Bank. So I think to that extent, there is a bit of butterflies in the stomach for investors in Yes Bank. But mid-caps today, not quite the flavor.
Oh, well, it's largely the frontliners that are stealing the show, but the mid-caps are not doing too badly. Up about 0.2% for the mid-cap index. The advance decline ratio is solid, Lata. 3:1 in favour of the advances. The entire fertilizer pack is moving with a lot of strength. Chambal fertilizer tops the list, up 6.5%. GNFC is up almost about 2% or so. You have the consumption basket is on fire this morning. Just look at that. Page Industries, you were talking about that. New highs there. I remember the joke, things which are hidden from the world can create good wealth. I think that says it all for Page Industries. A couple of other stocks, Imami surging now. Names like VIP, Jubilant Foodworks that Ashwini was mentioning looking very good. Future Retail has piled on some more weight this morning. So that one's up almost about 2.5%. So the consumption basket is doing very well. In autos, you have names like Ashok Leyland, etc. that are up and about. Just take a quick look at what's happening with Jet Airways and then we'll once again resume the gainers list. Jet Airways is down 1%. Okay, not bad. I mean, it's sort of the pre-opening was suggesting a bigger fall, but I guess the market mood is quite good. REC PFC also under pressure, by the way, down about 2.5%. And let's take a look at some of the other aviation stocks because crude has been surging, so not good for them. You could perhaps expect some pressure on those names as well. But otherwise, it's really a stellar rally that you're seeing in the market. Continues to pile on its gains.
Yeah, the bank Nifty slipped a bit. I think the stock that's looking really interesting now is Motherson Sumi. I think that US-Mexico deal and, all the auto ancillaries in general are doing well. Worldwide, we've seen that move in global auto stocks and that one right now is making highs of the morning. Just, came on my radar.
Yes.
So 1.5% higher is what you have on Motherson Sumi right now. Ashwini, your thoughts on market opening and is there a trade here?
See, Bank Nifty is retreated from previous all-time high. I think this retreat should be bought. I think today itself, it's possible that Bank Nifty gets past the all-time high and people who've probably gone short at higher levels, they get into trouble. But overall, the market looks good and it's holding on to a lot of the gains. But the dip is coming on the banks. So try to get onto the banking bandwagon. Once we are clear of this 28,400, you should see follow through on the upside.
Ashwini, Reliance 1,300 on that stock. If you can get the contribution chart, that's contributing 9 points to the index, and of course thereafter followed by the HDFC twins. I mean, it's a day when all the big boys are coming out and performing as well.
Yes. Prakash, I wanted your thoughts on Motherson Sumi. That's seeing a big move, in fact, even on Bharat Forge.
Yeah, absolutely. So I was going to tell you that if Motherson benefits out of this new version of NAFTA between the US and Mexico, Bharat Forge cannot be far too behind. And Motherson is, of course, the big this thing change which is happening for Motherson is that they actually seem to be very close to their inorganic growth targets that they had spelled out, which means they'll start being able to drive the value this thing in a overall context for components that they supply to OEMs. If the percentages go up, the margins also start improving significantly. So whether it's through acquisition, through new product launches, I think it's a company that again has been kind of ignored by the market, and then this could probably be a good trigger for the re-rating to begin.
Okay, well, record highs for Page Industries, and Mangalam reminds us that the IPO in 2007 was at an issue price of 360 rupees. Ooh. So it is 100-bagger since the IPO.
On the day of listing, it actually closed below the issue price. So that
Infosys did that.
Yeah, I mean, a lot of stocks have done that. Bharti has done that. Larsen and Toubro, L&T Infotech, the most recent example, L&T Infotech, and has been a 3-bagger after that. But anyway, let's take some more calls. The market's, of course, still doing fine. Sudarshan, your thoughts on market opening and any interesting stock idea?
Well, yes, I think we maintain our long positions which we are carrying, and fresh buying should be done only when the market pauses, and it will consolidate or pause. Give it another 1 hour for an intraday trade. Kotak Bank, I said earlier, is a buying opportunity, and so is HDFC, the finance company, not the bank.
Okay. Ashwini, what's the big call for the day then?
So I think fertilizer and banking could be the stocks which move up. So right now you are getting a bit of a consolidation on Bank Nifty. So Bank Nifty you should buy into, and broader market, I think fertilizer should do well, and also IT stocks are doing well. So maybe mid-cap IT could also start a fresh up move.
Okay, well, one of the stocks of the moment now is Future Retail. It's up almost about 3% piling on the gains. Remember, the stock had fallen quite a bit over the last 6 months. It went down from 630 or so, but it's trying to resume that uptrend. Mitesh, any thoughts on the market opening and any individual stocks that catch your eye?
I think a few of them, apart from fertilizers, metals and banking lot, which has been in news, I think, a couple of pharma names are picking up very nicely, and both Biocon and Cipla look very interesting to me. In fact, Cipla looks like it's broken out of that sideways activity which was happening in 660 ranges, now gone for at least in the short term, and I think the stock will head towards 700 very soon.
Okay. Well, the indices are simply reaching for the skies. 38,900 has been scaled. So we are, pretty close to 39,000 and on ahead for 40,000.
Just wanted to take one more stock actually, because that's Raymond out of F&O ban, of course, today. 2% higher is what you have on that stock. Prakash, before we let you go, any thoughts on Raymond? Is this a stock that you would want to back?
Yeah, but not at the current levels. I mean, all the good news probably is known, and so is the price, very clearly discovered enough of that. But this is definitely going to be a stock that people will want to have, like the way it was Arvind a few years back. Now it's ABFRL and Raymond's. So the new names keep on constantly replacing the older ones. But I think Raymond's will have a lot of shelf life for the next 6 months.
Okay, I just want to wind up this conversation with all of you gentlemen by asking about NTPC. Sudarshan, you want to take that one? It's climbed 4.6. Yes, would it do more?
No, it won't.
Okay.
It's a very dull stock. It just has a chance that it went up on news.
All right. Thank you very much. I'm glad you said that, actually. It's going up for all the wrong reasons. It got a huge regulatory advantage. Up until 2011, they just got a return on their capital. I mean, a fixed return. And then they were made to compete with independent power producers who had to fight for every penny. It was so unfair that NTPC got a field day. And that's why we have the mess we have in the power sector today. One of the reasons is NTPC. So, well, that's just an emotional rant. Gentlemen, thank you very much for joining us through pre-market. Ashwini, Sudarshan, Mitesh and Prakash, and giving us your early morning comments as well. The Sensex and the Nifty are flying high, absolutely. 11,750 Nifty and 38,900 almost on the Sensex. The Nifty bank at 28,350 almost. With this backdrop, let's invite our market master for the morning. Atul Suri, CEO of Marathon Trends PMS, joins us now. Good morning, Atul. We meet in a very celebratory mood. You had told us 16,000 on the Nifty, haven't you? Well, now have you advanced that target to a few years earlier?
No, I think it's these levels. You know, I had said 17, but these levels, honestly, Lata, is more a function of direction. You know, the important thing is that whether you touch 17 or no, the thing is that two things really matter. One is, am I allocated? Am I long equities? And the second thing is, am I in the right spaces? So when I meet clients, etc., I find that these are the two things that need to be addressed for me as an individual and for every market participant. So all these levels that we give, yes, I mean, they may or may not, you know, you may get somewhere near, but the important thing is that you get a sense of size and magnitude and a sense of direction. So when I meet people, the last 1,000 points have really taken most people by surprise. You know, we were coming out of a 6-month, very, very difficult market, and where a lot of the mid-cap, small-cap indexes were down 20–30%. So people are really surprised, and they're really looking for these reasons, you know. So I really think that one must have a belief in the longer-term trend that we are in this market. And one must not really wait for the perfect situation, perfect correction that at which stage I'll deploy. You must get into this market. Yes, it's run up a lot. Yes, it will correct. But the thing is that you have to look beyond these short-term cycles and ultimately be allocated to equities, because I still feel that we are part of a larger bull market, which I think will carry on for the next 2 to 3 years. The second issue that comes up is the spaces, because again, when I meet people, you know, everyone's saying that, you know, yeah, the market's making new highs, but it's very narrow. And then when you wonder why they are saying that, the answer is that very often the stocks or the sectors that they hold are not moving. So that also is a reality, that any long-term bull market, it does not mean that one sector will go from point A to Z. Every correction will actually throw up new leaders. And it is our job to really go identify how stocks have behaved in the corrections, what are the fresh breakouts. So I feel that the market, the leadership has changed. There has been a sectorial change. So a lot of people again find themselves in stocks, spaces, which the market is doing a lot, but it's not much happening. And you will have to bite the bullet and ultimately be sort of, you know, fierce enough to really exit out of these positions and get into new sectors. I'm not speaking of 1 week, 1 day, 1 month. I'm speaking on a multi-year trend. So this fresh round, this 1,000-point rally has thrown up new sectors. It's very easy for us to see what they are. It's very evident already on the screen. But the difficult part is to be able to exit those that are not performing. As I said, to bite the bullet, very often you may have to book a loss and move on to these spaces. Because if you don't do that, you know, you have two pains. One is the pain of holding something that is not moving. You may incur a financial loss. And second is an opportunity loss, which I think is even bigger. So I think that in a larger bull market, every correction will see a bit of churn, a little churn in the portfolio. That's par for the course. It is our job to identify what is the next set of leaders. And the next set of leaders, whether it is consumption, we've been talking on this for months, whether it is select pharma stocks, whether it is the private financials, it's there. It's there on the screen as of today. We can see it every day. But the pain is that who's going to bite the bullet? Who's going to exit out of losers? Who's going to get in when things have run up a wee bit? So I think that's the whole game. Targets are good. They give you a very good sense of direction.
Yeah. Atul, good morning. Though, I mean, of course, you know, you could argue that at least over the last 1 month, the rally has been broad. We went through a period where the market was narrow, but it's broadened a bit. Just look at Axis and ICICI once again. You know, you may not want to talk individual stocks, but I mean, if you can on this one, Atul, the Bank Nifty, of course, is made up of HDFC Bank and Kotak, which have 52% weight. You could add an IndusInd and the rest, which have been the dogs for last many years, but have started to perform. But that's coming at the cost of the erstwhile leaders taking a bit of a backseat. Your thoughts on that?
Sure. So I think, Anuj, you know, there are some stocks that are marquee names, and they represent a theme, almost a sector. Again, I'm like, for example, Reliance. I've been talking about it, that here is a stock which almost has a sectorial feel. And when Reliance comes out of a 7, 8 year, 9 year consolidation, do not expect it to be a small move. It can be a very, very tectonic shift, and the impact it has in the market. please, I have a vested interest in this stock. I own this stock, so please do your own research. I run a PMS, so whatever I say, take it with a pinch of salt. The stocks that you mentioned, these are commercial, private lenders. Again, when these stocks, which have been through a multi-year bear market, actually 2, 3, 4 years, and when they are kind of breaking out and coming out, what you are seeing is new leadership emerge. This is to the earlier point that I said, that when markets go through corrections, a new set of leaders will emerge. And very often, some leaders in the previous move may actually rest or not do much. So it's going to be important. Even if you extend this argument further, you look at pharma, another sector which has been a 3-year kind of underperformer. And the kind of leadership that you're seeing in some of these pharma stocks is phenomenal. So I feel that in the last 2 or 3 months, you are seeing a churn, and it is important that you are able to press the trigger. Most people just see it, they are shocked, and they only complain that, everything is going up, but my stocks are not going up. So that is why then they start rationalizing, saying, no, this rally is very narrow, this rally has this problem. And then, in today's world, you can list down 10 different problems, right? From politics to GDP growth to interest rates to dollars. So every day, you can find a headline. I can really list out 10 such things. But Mr. Market is doing something else. And our job is to actually work with Mr. Market. So from my understanding, new sectors, new themes are emerging. And I think the crux is going to be able to move into this, because these trends, these stocks are not just a one-off small mid-cap stocks. They are marquee names. They are sectorial and theme representatives. And these, I think, can run for the next few years. So sooner or later, somebody will have to get into it. The sooner, the better.
Oh, absolutely. I mean, we thought 2017 had spoiled us, right? With the kind of returns. I mean, look at 2018 so far. Some of these large caps, so many of them up 50, 60, 70%. Atul, hi, morning. I wanted your thoughts on how to approach technology stocks now. Because, names like TCS, Tech Mahindra, Infosys have done very well this year, already up 40, 50, 60%. You think the time has come to churn out of technology names, or do you see more upsides here?
I don't think so. I feel that technology still has a lot of legs. And barring these large caps you mentioned, there are some mid caps out there. Again, I have a vested interest. I do have mid cap IT in my portfolio. I feel the kind of chart formations that they have is very, very sublime. I'm a dollar bull, right? In the short run, I think the USD has been on the back foot. But I personally think that the US dollar is going to strengthen going further. And the key beneficiaries, apart from performance of these mid-cap IT stocks, is also going to be currency. You're going to have the same tailwinds in pharma. Again, I'm not talking about 1 day or 1 week, right? I'm talking about a little longer term time trend. So I think a stronger dollar is going to really benefit these two sectors going ahead. And one sector which I really want to talk about, and something I'm also exposed to, is MNC pharma. We are talking about pharma. Yes, there are a lot of stocks which are making bottoming formation, 1 year, 2 year kind of bottoming formations. But if you really want to look at blinder charts in this market, look at MNC pharma. What's happening there is phenomenal. These are stocks where most people hesitate because they say there's a liquidity issue. Yes, I agree there's a liquidity issue, but you can always buy a basket in that. The kind of chart formations, the lifetime highs, the volumes, the delivery volumes, the quality of breakouts that is happening in MNC pharma is again fantastic. So as I said, that these are newer themes. One will have to get into them. One will have to reshuffle their portfolio. So don't get stuck. I'm not saying that mid-caps will not move. Mid-caps will move. Again, if they are in the right spaces, look at mid-cap pharma stocks. So essentially, these themes will move out and will be the leaders of the next up move.
Okay.
What is the direction, whether it's 12,400 or 12,000, honestly, that doesn't matter. Once you have a sense of the larger market, will I get in on a correction? These are all rationalizations the mind will keep playing with. I think that is something which we have to live with. But I feel that the market portfolios require a churn. Sooner you do it, the better, because the leadership that's emerging is actually running away.
Yep, that it is. Atul, what about financials? Will you buy the HDFC and the relative underperformers, supposedly, HDFC banks and the Kotaks, or will you buy the ICICIs and the Axis, or will you buy both?
See, I wouldn't want to speak on stocks.
No, I mean the two categories, retail versus corporate.
Sure. So if I look at the longer term theme, I think that the mega trend in our markets is private sector financials. And why I say this is that these stocks or these themes were doing very well before this correction that we saw in early 2018. Even during the correction, you found that these stocks didn't really correct much. In fact, they were continued to make lifetime highs. And when the markets again moved up, again they are making new highs. So this is, I think, a characteristic of a mega trend. And this is something you absolutely want to ride, because this is where you will find your multi-baggers. Yes, as I said, new themes will emerge. You may have to do the shift. But something that if I have a mega trend in my portfolio, I am a little resistant from just churning it for a 5 to 10%, because ultimately what we are looking for are multi-baggers. And I think that in this whole private sector financial plays, I feel that maybe there's a short-term correction, maybe they are resting, they've run up very hard, but going ahead, I think that they can be much, much larger trends. Again, disclaimer, this is where my positions are, so I may take it with a pinch of salt.
Okay, by the way, the market's cooled off a bit. The bank Nifty is in the red actually, 50 points down now. So from the high point, it slipped quite a bit. That's after making a new high. And of course, even the Nifty has cooled off. The mid-cap index trading with a bit of a red. So that's interesting. And you know, PSU banks, the power financiers, these are few stocks where you're seeing a bit of a red at this point in time. Atul, the one sectoral index which has not done well or as well is auto. Of course, you know, large part of that is because of Maruti and Tata Motors, the two big stocks, though others have done well like M&M. But your thoughts on this space?
No, I think they are resting. You can clearly see that there is a bit of a rest. Even you see the two-wheeler space has had its fallouts. So definitely it's a sector which is resting. But even in there are some stocks which are mega trends, and you know, one should not be in a rush, because I feel that these could re-emerge. But you're right that at the moment there's not much happening there. One would not allocate fresh money at the moment. For me, the top picks continue to be consumption, which I have been saying for the last 3-4 months, MNC pharma stocks, and private financials, which still seems to be the overweight or the mega trend as far as I go.
Okay, Atul, we leave it at that. Thank you so much for joining us, and we hope your 17,000 Nifty target comes sooner rather than later. For now, the market has actually given up a lot of its gains, and the mid-caps and the bank Nifty are in the red. So just pull up both those indices. The mid-caps are now down almost 60 points, and the bank Nifty too has gone southwards. Led by Yes Bank, SBI, Axis Bank and ICICI Bank. So these are the couple of stocks that are really contributing to the pressure on the market. The advance decline ratio also is now moving in favor of the declines, although it's still a tad bit in favor of advances, but that those lines are going to crisscross. You'll see them. So I think it's volatile now.
I think look at PSU banks. You know, all of a sudden there's a big decline which is taking place. You know, pull out names like Canara Bank and Bank of Baroda. Canara Bank in particular, there's a vertical decline which has happened on Canara Bank intraday chart.
I think this market is falling under its own weight. It's not as if it's prodded by a rupee or a bond yield or something. They're all pretty steady. They were where they were. It looks like people have decided that enough is enough for the moment. Let's take a bit of money home and then see whether fresh positions need to be taken.
Okay, well, yes, we can move on and talk about some other news as well. The Defence Ministry, in fact, in the last few days, approved the purchase of 150 advanced tower artillery gun systems at a cost of over 3,300 crores. Now, in the longer run, we all know this is a positive for companies like Bharat Forge. There's the added tailwind of the NAFTA agreement as well. So let's discuss all of these issues. Mr. Baba Kalyani, the Chairman and Managing Director of Bharat Forge, joins us on the phone line. Mr. Kalyani, good morning. Thanks for joining us. I'll talk about the NAFTA agreement in a bit, but first I wanted to understand from you these 150 guns approval that has come through. It's just the tip of the iceberg, right? Because the requirement is for 4,000 guns, as we know. Now that ATAGS is in ordering phase, can you explain to us what the possible opportunity could be for your company?
First is, I think we have to congratulate the Ministry of Defense for making this first big Make in India move from a fully indigenously designed artillery platform, which was done along with DRDO and industry. So I'm very happy that this decision has been taken. And the Army requires almost 3,000 to 4,000 guns in the next 15 years. So this is the tip of the iceberg. I think there will be many more opportunities that will come. But I think this is a very good and a game-changing decision that the government has made.
Okay. Well, I believe this has gone to Bharat Forge and the Tata Group.
Correct.
Mr. Kalyani, would you be able to just look beyond this? Are you expecting more such orders, or is the Defence Ministry also looking at other kinds of orders?
You know, we are developing almost 6 different platforms of artillery guns right now. This was the first one. We will have early next year 2 more platforms. And so this process will go on. And our aim is, as a company, we want to be a global leader in artillery. And I think that's our stated ambition. In the next 7 years, we want to be at the top of the league as far as artillery systems are concerned on a worldwide basis.
And when does this get completed, this order? And when do you make money, is what I meant.
I think the process takes roughly about another year for trials and everything to go through. And after that, you know, the execution will start. So I think in 2.5 years, the order will get completed. And of course, you know, this is a fully indigenous equipment, completely right from steel to forgings to machining to everything else. So hopefully we will do well.
So 2.5 years, this 150 guns order will get completed, right?
Yes.
Okay. Where will these guns be manufactured, sir? Will it be in Bharat Forge itself or any of the other Kalyani Group companies?
It will be in Bharat Forge in Pune.
Okay. And you had earlier told us that you have a guidance of 1,000 crores defense revenues over the next 3 years. Would you like to prepone that guide? I mean, do you see this money coming in earlier?
Well, right now, I think I'd like to keep that guidance. We're doing quite well. This year, we should see a start to our defense and aerospace business. I think we will see some reasonable amount of revenue coming in. And I think with the ATAGs happening and maybe other artillery platforms that will come in the next year or so, this should look pretty good.
Okay. Mr. Kalyani, what are the other ancillary industries that may benefit? Do you make the entire thing yourself, or is there a lot you procure?
We have almost something like almost over 100 suppliers in the small and medium sector industries who are part of this whole ecosystem that we have built in the last 3-4 years. So the large part of the equipment, of course, we make ourselves. Those are the large forgings for the barrel, the ordnance, the breech, the carriage, etc. But there are lots of complicated small things, hydraulics, electronic systems, etc., where we have a huge ancillary base that we have developed.
So now that ATAGS is in ordering phase, you will have a fair assessment of what kind of capacity you need over the next couple of years. Will you be increasing your artillery unit capacity at any point in time? And does this also pave the way for exports at any point?
We are right now working on creating a capacity, hopefully by end of next year, to build 1 gun a day. So that's our capacity, and that will be perhaps the largest artillery capacity in the world once we get to that. And clearly, you know, exports is pretty much on the cards.
So will this capacity entail some more, you know, investments as well? I mean, should we expect R&D expenses to go up over the next couple of quarters? Any investments that you're looking at?
No, we have already made the investments. We already have a facility. We just need to create some balancing capability for assembly and integration purposes, which is you know, pretty small compared to the investments that we have already made in the manufacturing side of this.
Okay. Mr. Kalyani, if I can take the conversation now to another chapter altogether, or another issue. The NAFTA is now getting replaced by bilaterals, and there is an agreement signed between Mexico and the US. One would assume that another one will be signed between Canada and the United States. How does this renewed jigsaw arrangement change matters for you? You benefit, you don't?
I think this is all beneficial. I think slowly the trade problems are, you know, beginning to decrease, and I think this is good for the global economy. Some of the stress that has come in the global economy will go away. So this is good news.
Okay. Now for more general questions, sir, what are you expecting in terms of growth, say over a 3 or 4 period? Now you have, you're firing on other cylinders, as it were, literally. So if you're going to give us a 3-year view, does it look like a 25% CAGR on revenues? Does it look even better?
I hate to give numbers, but all I can tell you is that, yeah, we are firing on all cylinders. We are looking at fairly big growth. I think the defense area will also generate a fair amount of growth for us in this year, and of course next year. So things look pretty good right now.
I'm not asking you for the second decimal point on your earnings per share. I'm only asking you a broad directional. This year, you've given us 25% this year.
I would say that, yeah, we will be in the higher, let's say, about 20% growth rate, sure.
Okay, and you said defense business will give you a good revenues in this year and next. What does good indicate? I mean, what are we looking at ballpark?
Well, I have given, I've already said that in 2 years we'll reach 1,000 crores. So that's pretty much where we are. I think if we are a little lucky with exports, we might do a little better.
Okay, Mr. Kalyani, all the best, and thank you so much for stopping by and speaking to us on CNBC TV18. So big defense opportunities seen there. But for the market, Anuj?
It's slipping a bit, Sonia. Now, the key point is buy on dips, but at, on what dip, that's something that, you'll need to figure out. The mid caps are falling quite clearly. Ashwani is back with us. Ashwani, your trade was to buy that dip. Have you been stopped out, or are you carrying that position on the Nifty Bank?
See, the way Bank Nifty has reacted with previous high, it's fallen vertically from there. So this is not a mild correction or a dip. This is going to get a bit serious. And the problem is that, like yesterday, Bank Nifty was sitting on shorts. Today it is sitting on longs. So what I have done is I have cut down my long positions. We lost 120 of the gain we had, plus you are losing another 70 within the first half an hour. Bank Nifty is down 200 from its highs of the day. So that's not a positive sign. So we are now short on Bank Nifty, and we may give back maybe even 50-60% of yesterday's gain. So I would look at this a bit more seriously. Maybe the 1.85 put call, etc., is playing out. But it's clear that financials are seeing heavy selling, and this will likely get accentuated because the overall market is, sitting on a lot of long positions. So that remains the call on Bank Nifty. That's what I was trying to look for. Do we get a mild, correction or a vertical decline? This certainly does not look like a dip to buy. So overall, individual stocks, BOB is a sell with a stop of 152, target of 140. Canara Bank is a sell with a stop of 285, target of 272. And Cipla is a buy with a stop of 668, target of 690. Maybe market is pricing in falling rupee, crude beyond a certain point. When these things come into the picture, that only price action can tell you. But overall, I would think that Bank Nifty is in trouble today.
Okay, are you only selling Bank Nifty, or would you look to take short positions in any individual banks?
I think you can easily take shorts on all PSU banks. This looks like something PSU bank related. So my sense is that BOB, Canara, SBI, etc., you can take short positions also.
Okay, all right. Thanks, Ashwini, for joining us. Well, for now, it's really volatile. So it fell, now it's risen again, and the Nifty is in flat terrain. So we'll take a short break. On the other side of the break, Rajiv Ahuja, the Executive Director of RBL Bank,